quite successful at the charts and trading Bitcoin this week. The purpose of this video is just to walk you through some of the trades we've taken and the reasoning behind them and how I actually managed to set these trades up and the things I looked out for before I enter these trades. So here we have it. What we're going to do is we're going to start from a clear brand new chart just to get some top-down analysis going on. Alright, it's always good to start to get a wider perspective before we zoom in. So we start on the daily, and on the daily we can see that Bitcoin is in a clear uptrend. It's printing a series of high highs and high lows all throughout. So we can see the high highs and high lows constantly printed throughout. Okay, so we have a clear idea of what's going on in the daily. After that, we go to the 4 hour. Okay, so on the 4 hour, we want to see exactly what Bitcoin is doing. All right, we can see here, if we start from right here, we can see that Bitcoin as well is printing a series of higher highs and high lows. All right, we can actually see that Bitcoin hasn't printed a single, lower high or lower low since, a very long time, looking at September of this year. All right, so Bitcoin is in a very clear uptrend. When that uptrend will stop, no one's quite sure. But we can see as we continue to trace this up, all right, that we're in a very clear uptrend. So what's happened at the moment? Well, whilst we're in a very clear uptrend, as of 11th of December, we actually printed off our first lower high, 4 hour structure in a bit more depth. So what can we see in the 4 hour? In the 4 hour, well, we can see the following take place, or we can call that a break. We can see the following take place. It prints a higher high, and then it breaks this high low. It breaks it all the way down here. Okay. After we get a break of the high low, what do we expect? We expect a potential lower high and a continuation downwards. So majority of traders are looking out for that. They're looking to get into a short here to ride all the way down to the bottom. So let's see exactly what happens. What we can do now is we can go to the 15 minutes. And on the 15 minutes, it gives us a clear picture of what's going on. On the 15 minute, we can see, that Bitcoin has printed a high, a low, a high, and then it's ranged here for quite some time. It's gone and it's printed, it's broken that range to the downside, but immediately rotated back to the upside. Okay, so we have a low there, a high there, all right? So on the 15 minute, we have our first breaking structure here, our first bearish breaking structure here. And this bearish breaking structure is followed by a bullish breaking structure. So this is actually quite confusing, okay? But it's quite evident that we're in a range here, all right? And we were actually able to enter, a nice trade, or I was able to enter a nice trade at this point because I realized that Bitcoin was at, the top of its 4 hour. We hadn't quite seen a breaking structure yet, but we had seen a 15-minute break downwards. And we can see a range forming, and it's clear that we are distributing in some way, shape or form. All right, so how was I able to enter this trade? Well, in order for me to enter this trade, I thought about this as a range. Okay, so we can draw our range box. And what happens in your range? In your range, you set your highs, you set your lows, and usually you oscillate between your top and the bottom of your range. So what you should be looking to do is to short the top of your ranges and long the bottom of your ranges. So by the time price reaches this region, I'm looking for a long. By the time it reaches this region, I'm looking for a short. All right. But how was I able to confirm this short? Well, this short was quite clear. Market Cipher gave me a very, 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 very clear indication that it was time to take a short. And how did it do so? Well, on Market Cipher, we can see that we are printing what's known as a bearish divergence. What is a bearish divergence? As price goes up, the momentum goes down. Okay, so this is a very clear bearish divergence on a momentum wave. This is an indication that we are, price is going to see some sort of reversal, some sort of turning point. And that's exactly what I looked out for. So what I waited for at this point, was a break-in structure, a bearish break-in structure, to enter my short trade. Where did this bearish break-in structure occur? Well, let's investigate. We're going to zoom into that region and see where that bearish break-in structure would have taken place. So we can't quite see it on the 15 minutes because this is the last low. That needs to be broken. Perhaps this needs to be broken to justify a short. So we can go into the 10 minutes. Let's have a look at the 10 minutes. Now on the 10 minutes, well, this is the last low that needs to be taken before a short. Still quite far off in terms of risk to reward and how your stop loss would have to be. Well, we can look at the 5 minutes. Well, actually, we can use the replay tool here. It might make it easier for us. We look at the 5 minutes, and in the 5 minutes, is there any clear break-in structure? Well, not quite. I still can't see a break-in structure here. So I'm going to go down to the 3 minutes. In the 3 minutes, is there a clear break-in structure? Well, not quite. You can't quite see one on the 3 minutes. But I bet this huge candlestick, this 3-minute candlestick, is a structural change on the 1 minute. Okay, so let's take a look at that. Yes, exactly. So there we have it. So on the 1 minute, if we were to follow our 1 minute structure up to that range high, we have high, 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 low, high, 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 low, high, high. I guess you can call that a high, low. You have the push, the markup outside the range. Okay, and your initial break will happen right around here. Okay, so this would be your first break-in structure. So what we can do at that point is we can mark that as a potential break-in structure. A potential break-in structure at the 1 minute. Okay, so if we were to play this now, we see that price clearly breaks down in structure, comes back into our range. All right, so at this point, we can look to get into a short because we have a 1 minute break-in structure confirmed. Where can that short take place? Well, if you wanted, you could have taken a short here. That's not short, that's a long. We could have taken a short here. If you take a short there, your stop loss would have to cover that high, of course. Okay, we can take a short there and write that down. All right, and that's exactly what I did. I entered my short here and I wrote it down. So we can see how that trade, progressed, and we can watch just to see exactly how that materialized. Let's go to the 1 hour. And on the 1 hour, we can play to see whether our stop loss was hit or whether it would have been a successful trade. And there we go, a very successful trade, okay, with good, decent risk to reward. All right, was that the only chance of getting into that trade? Well, not quite. We actually have another opportunity to enter that trade here. Well, we can see here that from the moment we looked to enter that trade, from the moment we, went into supply again, we started to print a series of lower highs. Lower high number 1, lower high number 2, lower high number 3, and, another lower high before the initial breakdown. But Market Cypher actually gave us another 2 opportunities to enter this trade. Now, where were they? If you can pause the video, see if you can spot them, and I'm going to tell you exactly where they are. Okay, opportunity number 1 was right here. Opportunity number 2 was right here. Okay, and what do I mean by that? Here we can see a clear as day bearish divergence in Market Cypher. Again, a clear bearish divergence in Market Cypher. So we had 2 opportunities to enter the trade there. Okay, trade there. Yes, the risk to reward would not have been the entry wouldn't have been as smooth or high as the initial entry, but still a very profitable trade regardless. Okay, and here you can see the trades that were entered. Short number 1, 140% profit. Short number 2, 97% profit. Okay, so we're entering this trade based on market structure and based on Market Cypher. Okay, so that was a trade that was entered, around the first week of December. Now moving on, so we got this massive wick down, and this wick, if we look at the 4-hour, this symbolizes a break in structure. Our first break in structure downwards. Okay, so if we get out to the bar replay tool, we can see clearly what we're talking about. So if we follow the 4-hour structure, this is your low, your high, and then you have a break-in structure on the 4-hour over here. We can see that clearly using this horizontal line. And we can label that as our 4-hour break-in structure. Okay, we can call it a potential break-in structure, but it's not a potential break-in structure. It's a break-in structure because it actually took place. Now, what do we expect after a 4-hour break-in structure? After a 4-hour break-in structure, we expect a retracement, and that's exactly what we got. We got a retracement going up, okay, and after a retracement, a potential follow-through downwards. So what am I looking for? Well, if I'm expecting a retracement, I'm looking to enter another short. Where exactly will I enter that short from? Well, a few ways I can figure this out. I can look at my Fibonacci tool from the high to the low, okay? And my Fibonacci tool is telling me that the golden ratio lies around here and the 786 lies around here. So this is a very beautiful region to look for that short. Lo and behold, that's exactly where we got a reaction from. So what can we do? Well, we have to investigate that further. So what I would do in this situation, is zoom in and see, what's market structure doing, what's market cipher saying, and is there any other opportunity to enter into a short? From here. All right. So if we zoom in on the 1 hour, I'm going to get rid of this 4-hour structure because we know what we're looking at. We're looking at this zone. I'm going to get rid of the fib as well because we're looking at this zone to enter a short. Well, we won't have known what's happened as far as market structure goes, so we can use the bar replay tool to go further back. Okay. Well, in a 1-hour structure, what we have on a 1 hour is we have the original low that was put in. That low has not been taken out. Well, it's been wicked here, but based on this, looking at this leg here, it's not been taken out yet. All right. So we have our 1 hour structure that looks like this. Yeah, we have a high, we have a low, we have a break-in structure over there. Okay, so before the 1 hour structure breaks, this low has to be taken out. That's not great for that short, is it? So we go on the 15 minutes and let's see what's happening in the 15 minutes. So on the 15 minutes, let's look at the structure. Well, closer as it approaches that region. Well, it looks like this. We have a high, we've got a low, we've got a high, we've got a low, we've got a high, we've got a low, we've got the high, which goes into our POI, our point of interest or area of interest, okay? And we actually have our low over there. Now we need to investigate that low. We have to see whether that breaks. Does it break structure? Now, how do we see that? Well, we can draw our horizontal line just to check whether there is a close below that point. And yes, there is. Okay, so lo and behold, there is a close below that point. So what do we call that? Well, we call that a break-in structure. Well, it's a 15-minute break-in structure. Call it a 15-minute boss. Okay. What do we expect after a break-in structure? After a break-in structure, we want a retracement and a follow-through. So at this point, I'm looking for shorts. I'm looking to market cipher to tell me exactly where those shorts may be. And what's market cipher telling me? Well, on the 15 minutes, I can see that we're printing, highs and lows. What do we call that? We call that a bearish divergence. A bearish divergence tells us that there's going to be a change in direction soon. There's going to be a turning point about to take place. That combined with a 15-minute break-in structure is more confluence as to where, when this is going to take place. So now we're looking to enter our shorts anytime from now. All right. So perhaps you could have entered your short here. You would have been in drawdown for a little bit. So if we entered our short there, our stop loss would have to cover that high. Huge stop loss, all right, I guess, for now. Okay, we're looking to drive this all the way down. But we would also need to continue to see, can we get a better entry? Can market cipher produce a better entry? Okay, so in that case, we would let price continue. We watch price, we watch price, we watch price. And there we have it. Market cipher has given us our first indication of a short. What is that? Well, on a 5 minute, as price goes, our second indication actually, as price goes up, our momentum is going down. Okay, so this is an indication that there is about to be a turning point, a change in direction, a maximum point. Okay, as we continue, we can see, boom, that's exactly what we observe. So if we had entered our trade right there, we would have seen the TP here, that not take profit. Okay, and look at that, price drives all the way down. We could have put a stop loss here, but to be safe, we would have put it here, or actually above the entire POI, the zone we're looking for. All right, so this would have been an excellent short. This would have been another excellent short. Okay, and that would give us our second trade. All right, so let's see what price continues to do as we go forward. Let's look at the 1 hour just to speed things up a bit. So that would have given us our second short. Okay, super. So at that point, we're in good profit over here. In terms of managing your trade, I would highly suggest, you move your take profit, take your money off the market, but also move your stop loss to entry so that you guarantee a winning trade. Move your stop loss to entry so you guarantee a winning trade. Again, move your stop loss to entry so you guarantee a winning trade. Okay, so that's how I was able to enter those trades. That's how I was able to enter those trades. All right. So now I'm actually currently in a long. I'm currently in a long that is, well, let's have a look how the long is doing. I'm in a long that's up about 274%. I got in at 40,576. I've taken profit at 42,839. All right, so we're gonna, again, one more time, investigate exactly how I was able to enter that long. Okay, how I was able to enter that long. So this is the long we're talking about. So this is the long around here. So I'm just gonna mark that. So if we're looking at my entry was at 40,576. So that would be here, 40,576. So roughly about there. Roughly about there. So it doesn't get cleaner than that. It doesn't get cleaner than that. That's a smooth entry. Okay, and we're still in this long and we're currently in good profit. So let's see exactly how I enter that long. So we're going to get rid of this. We're going to get rid of all of that. All right, and we're just going to talk you through how I was able to enter that long and some of the things I looked out for. So first things first, so I realized we had had a downturn. We had had a drop here, which meant that we're in some sort of range. We're in some sort of ranging market. So I have my low of the range here and I have my high of the range here. Okay, I have my low of the range and I have my high of the range. So what I'm going to do is use the bar replay tool and we're going to rewind to around here before the trade actually takes place. So I realize I'm in a range. How was I able to realize I'm in a range? Well, we have our first tap at the bottom, we have a second tap at the top, confirming that we're in a ranging market. Okay, so after that, what areas was I looking for to enter this trade? Well, this trade was actually given, to the public in the Discord, and we can see exactly where this trade was posted. This trade was posted beforehand. For those of you who follow the Discord, just to see, what area I was looking for this trade. So this trade was posted on the 13th of December, at 12:26 p.m. Here we have it. Okay, so we have our initial drop down, we have the range that's been established, and you can see that I was looking for a few trades at this point. I was looking trade number 1 over here, trade number 2 over here, and potentially trade number 3 all the way back down here, breaking that low that we've already set. Well, the trade we've actually managed to enter is trade number 1, the first actual trade. And let's see how that transpired. What was I looking out for? Well, it says, in the case we get a markup from here, we have a range within a range with some nice buy-side curvature liquidity along with a potential for Trinity Model 1. Well, what's a Trinity Model 1? Trinity Model 1 is basic Wyckoff. Okay, it says this could make for an interesting long setup, from the next 4-hour lower high. We also have trade number 2. We've got the naked point of control, the 382 level, blah 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 for the short. Okay, so what we're going to look at is how I was able to enter trade number 1 and exactly how I got into that trade. So here we have it. We have our range that we saw earlier. We have the range low, we have the high of the range, all right? And we're looking for our POI which is situated around here. How was I able to establish that POI? Well, when you're in a range, in order to establish potential POIs, you're looking at the tops and the bottoms of your range. You're looking at your range top and your range bottom. So where is our range top? That's up there. Range bottom's up here, down here. What also are we looking out for? We're looking for whether there are any supply or demand zones in our range. We're looking to see if our supply and demand zone has any inducement. Okay, and we're looking at liquidity and seeing what is liquidity telling us. So with all those things in mind, and of course we're looking at market cipher, the GOAT. Market cipher is the GOAT. So we're looking at, is market cipher telling us to go in to pull the trigger, or is it saying actually give it a minute, wait, hang on before you get in? So let's investigate. Well, our range low is over here, so immediately I'm looking at potentially this region to enter this trade. Okay, but for a more refined entry, I'm looking to see whether there are any zones, any demand zones. So in order to do that, I'm going to investigate the price action over here. I'm going to investigate what's going on here. The chances that we have a zone here that will be respected is low because this wick mitigates everything. There is a slight chance we have a zone here, okay, and there is also a chance we have a zone here, but we have to investigate to see what's going on. So we're going to use the bar replay tool, all right, and we're going to first of all go over here, okay, and let's do a quick top-down investigation for any supply demand zones. All right, so in a 1 hour we can't see anything. 2 hour we can't see anything. 30 minutes we can't see anything. This would this be valid? Well, potentially, if it will be valid because it broke structure. Okay, so this is zone number 1. This is zone number 1. This is in a 1 hour zone. We can label that if we want. We can call it 1 hour. Inside, put that in the center. Okay, carrying on, we've got looking at the 15 minutes. Do we have any zones in there? No. I guess you have this zone as well. This is a 12-minute zone. Okay, so we can mark this in. We can call that a 12-minute zone. Okay, all right. And the 10 minutes, do we have anything in there? Well, I guess a 10-minute is fairly similar to the 12-minute zone. 5 minutes, anything in there? Or again, similar to the 12-minute zone. 3 minutes. Oh, we also, I guess we also have this zone here, don't we? We have this 3-minute zone here. Oh, Bitcoin is rushing through. Bitcoin is rushing through. Let me just take a quick look to see what Bitcoin is doing. Yes, Bitcoin is rushing through. So that long that we're in, it's doing pretty well. It's still doing pretty well. All right, so after this video, I'm going to take a look at the long and let's see how high up our profits are in. So the long that we're discussing at the moment, which we're still in, is doing pretty well. Okay, all right. So back to the video. Let's see where we are. Okay, where were we? All right, so we have a 12-hour zone, and we have not 12-hour, we have a 1-hour zone, and we have a 12-minute zone. All right, okay, but what we can see here, if we take our bar replay tool back down here, what we can see is we can look to investigate what happens. All right, so let's play. So price, price goes up, and price touches that 1-hour zone, so it mitigates that 1-hour zone. So this 1-hour zone is no longer valid. Okay, boom, no longer valid. What about the 12 minutes? Boom, that touches it as well. Okay, so no longer as valid. All right, but I guess this is still alive, and this was a 3-minute zone. This is still relevant, and it's a 3-minute zone. So what I can do now is I can get rid of this, I can get rid of that. Okay, so we still have a 3-minute zone that's valid at the bottom of our range. All right, so what we do now, yes, that wick definitely tells us that that 1 hour and a 12-minute would have been mitigated. So what we do now is we're going to investigate our second area. The second area was this area. So again, bar replay. Let's go around here, and let's start from, let's say, the 1 hour. That's a good place to start. Okay, so on that 1 hour, well, we have a zone here. We can label that the 1 hour. Okay, all right. Oh, actually, that's a 2 hour. Excuse me. We can label that the 2 hour. 2 hour. Okay. Let's look at the 1 hour. Anything for the 1 hour? Well, it's basically the same as our 2 hour. Let's look at our 30 minutes. Our 30 minute, no, we don't have anything on the 30 minutes. The 15 minutes. The 15 minutes, potential. No, we don't. That's been mitigated. No, we don't have anything on the 15 minutes. The 12 minutes. No, I can't see anything on the 12 minutes. The 10 minutes. No, that's mitigated at 5 minutes. Okay, so on the 5 minute, it looks like we've got a demand zone right here. So we can pull that across. I'm going to label that as our 5 minutes. Okay. And we also have another one down here. All right. I'm going to label that our 5 minutes. Okay. So there we have it. All right, do we have anything in this wick it's worth looking at? Well, let's see. On the 3 minutes, 1 minute. Well, 1 minute's pretty low now, so we're pushing it. All right, so I would probably stop at the 5 minutes. So here we don't have anything on a 1 minute. All right. So what have we got here? So we've got 2 hour demand zone, 2 5 minutes demand zone, and we have a 3 minute demand zone from earlier. Okay. So what we're going to do now is we're going to drag those across. We're going to drag those across, and we're going to see what price does as it approaches it. What price does as it approaches these zones. Okay, because these are going to be the zones for our potential longs. What is a demand zone? Demand zone is where there is an infusion in people who are interested, in the price at that level, or in assets at that level. Okay, demand zone is basically when the door opens, when a shop door opens, and you have a queue of buyers ready to buy your stock. Okay, so at that price, the shop door opens and they all scoop it up. Okay, so you tend to see a reaction at your demand zone. Okay, so let's see what price does as it approaches this demand zone. Okay, so all right, so here we have it. We have our wick down, our first wick down. That kind of mitigates that 2 hour zone, so we can, get rid of that guy. And we can continue to see what price does. So price seems to be coming down quite aggressively at the moment. As price comes down, of course, we're looking at liquidity. I'm thinking, is it building any liquidity? Is there any sweeps that may potentially take place? Okay, so we pause it. So what do we have here? It seems like this demand zone is also being mitigated. Okay, so we're going to get rid of that. Well, let's see what price does as it approaches this demand zone. The price is coming down quite aggressively. So I would be really cautious here getting into a long, because price could just do this, come down, go up, and boom, you know, have another leg down, another mark down. Okay, so when you see an aggressive price action like this, be cautious. Be very cautious. Okay, so good. So what does price do now? Price comes again into our area of interest, this zone and that zone. All right, now remember, this is exactly where I entered the trade. Now, why did I enter the trade here? Well, let's see. What we're going to look at now is we're going to look into this little bit of price action here to see if Market Cipher gave us the green light. Did Market Cipher give us the green light? So I'm going to pause it for a second to give you a chance to just, see, whether you can see the exact reason why I entered this trade. Okay. So the reason I entered this trade, we can see, clearly that as price goes into our 5-minute zone, this is our 5-minute zone. As price goes into our 5-minute zone, let's see if I can extend this. Yeah, there we go. As price goes into our 5-minute zone, Market Cipher, the GOAT, is producing a bullish divergence. What is a bullish divergence? As price comes down, printing lower lows, Market Cipher is printing higher highs. Okay, so price comes down, momentum goes up. And there we have it. That's your signal to enter into that trade. We can see that on the 15-minute, we can see it on the 12-minute, we can see it on the 10-minute, we can see it on the 5-minute, we can see it everywhere. All right, so that's why I entered the trade right there. Yeah, that's why I entered the trade right there. And as I enter the trade, I'm watching the market structure to see whether there are any break in bearish structure. Why am I looking to see if there are any bearish breaks? Well, I'm looking to see if there are any bearish breaks, because if there is a bearish break, what does it tell me? Well, a bearish break tells me that my idea of a long here is potentially invalidated. My idea of a long here is potentially invalidated. Okay? All right. So that's the exact reason why I entered that trade. And that was exactly what I was looking out for. So what we're going to do is let's just play the price action to see what happened thereafter. All right, beautiful. So what we see here is that we have on the fifth, go on the 12 minutes. On the 12 minutes, we're printing high highs. Our first high, we have a break-in structure here. This validates my long. A lot of people would wait for that break-in structure to enter that trade. They wait for that break-in structure, wait for the retest and enter around here. So this is another great opportunity to enter that trade right there. Okay, and that's not late. That's probably the safer thing to do. That's the safer thing to do. So to wait for market structure to enter, to move in your direction. Okay, so that would have been an excellent place to enter that trade as well. All right, so let's play. Let's see what price does. It wicks up again, and here we have it. Okay, so this is where we are at the moment by the looks of things. So we can get out of the replay tool, and we're looking to ride this trade up. Now, how have I managed this trade, as it's been open? So what I've done is I've taken about 50% of my profits here, and I've taken another 50% of my profits here. Why did I take it here? Well, I took it here because this was the first breaking structure. I've also taken here because this is another liquidity point, as you can see. Okay, and what I'm doing now is I'm going to let the rest of the trade ride to see exactly how high we can take this. You know, is the price coming to retest this level up here? Are we coming to retest this level up here? Okay. Or are we going to break back down before we do so? All right. So that's exactly how I enter this trade. As for my next trade, what am I looking for? Well, for my next trade, it's very simple. For my next trade, I'm looking at these highs. This is the high I'm looking out for. I'm looking at price action when we get to this level. I may look around here for some supply to see if there are any special areas that I should be looking out for. All right? That's the next short that I'm potentially looking out for. So that's exactly how we enter that trade. We're still in that trade, and just to show you that we are still in that trade, if we go on the journal, if we have a look at the Mount Rushmore, we can see that's just been posted today at 2:05, so 3 minutes ago. So I've just taken a screenshot for you to see. This trade is 326% up just by about a $3,000 move. Okay, so that's a pretty good trade, pretty profitable trade. Okay, and you can see this is from my account, the trade journal. So just a quick summary and just some quick tips for yourself whenever you're looking to enter a trade. Make sure you've got your POI established. Make sure you're trading with market structure in mind. Make sure you're looking at market structure as you approach your POIs. And again, make sure you're looking out for market cipher to tell you when to pull that trigger. Okay? Market cipher and market structure will always tell you when to pull that trigger. All right, see you next time.